ROE, do you want higher versus lower? Higher is better, but I'm going to put a caveat in there. It needs to be for the right reasons. And I'm just going to put that in the back of your head because we're going to have to deal with issues of leverage on that ratio. And because of leverage, it can be actually propped up, if you will. ROE can be propped up with leverage, which is actually risk. All right, I'm going to show you the math to that later. But yeah, the higher the better, as long as it's for the right reasons. Right? Okay, so with the market measures, this is a set of ratios. I'm going to go back to the Shark Tank. But this is a set of ratios you can only do on a company that is publicly traded. Right? Now, I'm going to tell you how the sharks in the Shark Tank actually use these ratios to imply off of firms in which are coming into them for investments, right? So you know what everybody knows Shark Tank kind of works? Has everybody watched the Shark Tank? Yeah. Well, if you haven't, you got to start. So Charles, you got to start watching the Shark Tank. Was it channel? Is it CNBC?
Yeah.
CNBC. You got to start watching the Shark Tank. It's on almost all the time, right?
Yeah.
I can watch one
Reruns,
episode
yeah.
after another, after another, after another. And so if you're in finance at all, or even business, period, Shark Tank's a good one to watch. It really helps you understand these ratios too, because all they're doing, they look like they're like doing something really snazzy and like they're really smart, but they're really not. They've just got a couple of ratios in their head. Do a little bit of homework before the show about the types of firms that are coming before them, and they're coming up with some multipliers. And that's where we're going right now, is to talk about multipliers. So, first thing is you have to have a firm with a market price, and that market price is the stock price, right? These are stock prices right here, and these are per share. So in other words, here's Apple. Apple trading at $174.54 right now. Lamar Advertising, everybody's familiar with them? They're a Louisiana outdoor advertising firm based out of Baton Rouge, and $65.62. Right, little old First Guarantee down here. The bank went public in 2015, I think, and so you can look their stock price up. They're not up there though, but you can look their stock price up. But you have to be publicly traded in order to have stock price, ticking minute by minute by minute. Right. All right. So, with that said, once you're publicly traded, what do these companies have to do to become public?
About their financial report?
Yes, they have to file every quarter with the SEC. And so there's a whole bunch of information out there about these companies that are publicly traded. Everything from the number of shares outstanding, this number here, right? To their financials, their income statement, their balance sheet, their cash flow statements, their letter to their shareholders, all kinds of information. If any one of their insiders, one of the executives decides to buy or sell their shares, they have to SEC first before they do it to identify as an insider ready to trade. And they have to do that several weeks in advance. Does that make sense to everybody?
Yeah.
All right, so with that said, these guys are in the light, right?
Right.
As opposed to Community Coffee, who is not publicly traded.
Yeah.
Publicly traded means they are in the light, they're trading on an exchange. In the dark means they are not on a public exchange. You cannot buy Community Coffee stock, right? There's no information out there. There's some estimates of Community Coffee's, their revenues, but that's about it. You won't find much else out there. And in fact, if you work in their accounting department, the last I heard, you had to sign non-disclosure, where you say nothing about anything that goes on, so that none of this information leaks out about their expenses, their earnings, Nobody has any idea.
Why do you think that matters if they're
Yeah.
not publicly trading?
They want to keep it quiet.
Privately owned.
They're privately owned, and you have no business. That's how they feel, right? They don't want you knowing how much they're making. Make sense to everybody? That's one of the, things about staying private. Get out of my business. You don't have got nothing on here. You don't get to see, right? We get to make our own decisions, and we don't need to answer to shareholders other than whoever owns. There are people that own the shares of Community Coffee, and I think they're predominantly family and some of the executives that are offered shares. That's who they answer to. Once you go public, you are what? You're at the whim of the shareholders. You have to make them happy.
Yeah.
And there's a lot of things about making a shareholder happy, right? And what do shareholders want? They want their wealth to be maximized, right? Right. And they'd like it now rather than a year or 2 or 3. So you'll find privately held companies like Community Coffee tend to move slower. In other words, in decision making, which is not a bad thing. I think sometimes these publicly traded companies are so pressured on their financials to produce those earnings and to produce these for the shareholders that they make decisions more short term and less long term. Does that make sense? Which is not necessarily a good thing, because that's a thing where sometimes your investments need to be longer term, looking forward into the future further. So you got these private firms that are capable of doing that because they answer to only a small group of shareholders, right? Does that make sense to everyone?
Yeah.
And so they're in the dark versus these guys are in the light, right? You can infer something about Community Coffee's value, though, by looking at companies like Starbucks, who are actually publicly traded. You can infer some values about Community Coffee from their financials at Starbucks. Does that make sense?
No.
Not up there, no. But they are publicly traded, and you can look up their stock price, and you can look up earnings, you can look up assets, that kind of thing.
But isn't there a difference? It's like global. Community Coffee's only in like the southeast.
Southeast up to somewhere around Virginia, so yeah.
Right.
So there's a difference in size. If you were doing an analysis, you might want to probably, first of all, you don't have the financials for Community Coffee,
Yeah.
right? And so the idea would be to be inferring something about their value from Starbucks. It's not that their stock prices should be identical. It's that some of their ratios here, these multiples that we're talking about, may be similar. Does that make sense to everyone? So let's start out here with the PE ratio. That's the most famous ratio, market ratio. That is the price to earnings, is what they call that. And they put everything in per share here. This is per share, rather than the value of the firm as a whole in the numerator. We're talking about the value per share of stock outstanding, all right? Which is exactly these numbers up here. That's the per share value right there you're looking at. All right, in our case, our company is valued per share at $87.65. All right, and there's 190.9 million shares outstanding. Now, in these larger firms, you'll find more complicated scenarios where not only do they have common shares like what we're looking at, they have preferred shares, they have treasury stock, they have maybe different classes of shares, like different classes of common stock. There might be founders stock. Those would be maybe the founders of the company retained shares, and that was at a different value. Does that make sense? A whole different set of shareholders. All right, and so what you're seeing up here are common shareholders. That's what's being traded, right? All right, so it could get kind of complicated. That's what I'm saying. Here's, we got it pretty simple. All right, so the PE ratio, just take the price per share, and then you divide it by earnings per share. Easy as that. So the PE. Price per share, price is $87.65. All right. Earnings per share. Okay, so the earnings were, we went back to the income statement, we saw this already. Yep, it's the net income divided by the shares outstanding. So we've got 690, and I'm just gonna keep all the zeros off of it, it just makes it confusing, all right? So we've got 690 or 89. And I'm gonna divide that number by 190.9 shares. I think this is all in millions. Yeah, so everything's, all the income statement is in millions, the shares outstanding were in millions.